Good morning, ladies and gentlemen, and welcome to the show. Listen, I'm glad to have you guys here. Today is October 10th, 2019. It's a Thursday. And, I've been seeing something coming in the markets. Not just in the markets, but in the overall global economy. Looking at charts from many different countries, Germany, England, charts on different things. And all of these charts are showing me something. We see on the end of the charts, we see a downturn beginning. And I see something huge coming this way. Huge. And I think it's going to start probably really get started before the end of the year, actually, to tell you the truth. It's eminently in our future. And it's huge. The ramifications of it and bearings of it are huge. Let's take a look. Let's get the charts, our charts open right here and take a look at this is coming from Zero Hedge. It says the debt market is suffering a quiet meltdown as billions in loans are suddenly crashing. A quiet meltdown. But now, if we go down here and we take a look at the charts, and this is typical. Kind of ignore the chart, but just take a look at the end of the chart and you see the downturns. You know, uh, this isn't the only set of charts that's showing this. I see this over and over again repeated. This downturn starting, and it's not just talk about a recession coming and so on. I think this is going to be more than a recession. This is going to be a global downturn that's going to spiral us past recession point. It's going to spiral us into a depression. And, the Fed and everybody, they only got one option, and they're going to have to try to print our way out of this. And this is all coming very soon. I'll read a little bit of this. It says, debt market suffering a quiet meltdown as billions in loans are suddenly crashing. An exponential growth in the levered loan market in the last several years has created an enormous excess accumulation of sub-investment grade loans that are ticking away, I guess. It says they're getting ready for when the next recession strikes. So what we see here is absolutely phenomenal, what's coming. And it's eminently in our future. We're moving quickly toward it. And there's another factor we have to figure in all this. Is recessions in their very nature too become self-fulfilling prophecies. Because as people hear that the recession's coming, they start to cut back spending a little bit and stuff. And this trade war at the same time, that's been extending itself out, is not helping things. And this is exactly the same thing that happened back in 1929, when they had the, I think it was, what did they name? Something, Hawley tariffs. They put tariffs in anyway. And they had it's the same sort of deal. That's what we're seeing now. Let's get right in here and let's take a look at the gold price right now and see what's happening. Today's not a good day for gold. Gold's went down $9 so far today. It's went back below $1,500, $14.97, and we see it going down right now. Let's take a look at silver and see what silver's doing. Silver is 1745 bid, 1755 ask, and we see the price dropping too. It's dropped 25 cents today. Not a good day for silver. Let's take a look at cryptocurrency today, see what it's doing. And we see cryptocurrency falling as well today somewhat. It hasn't give up its gains it made in the last couple days yet. It's 227.8 billion. Refresh the page. 228.4. So cryptocurrency's holding up a little bit better than most things right now. It's made gains in the last couple days, and it's trying to hold them. We'll see if it can hold its gains. In this environment right now, money is really, really nervous. Let's call it nervous. Investors are very nervous right now. Let's take a look at the Dow Jones. They got good reason to be nervous. The ones that are doing the research know there's something coming big, you know. Let's take a look now at the Dow Jones, and we're going to refresh the page right now and see what's going on. 31.57. It's up 31.57. 26,377. You know, the Dow Jones hasn't went anywhere for ages. Really, hasn't really went anywhere big in particular for ages. You know, if we go back, let's see if we can get the 5-year chart here. You know, if we go back right here, we can go all the way back to when it made a peak way back in the first of 2018. You know, so that's getting almost 2 years ago. And, you know, basically it's just been trotting along sideways. Because we made a peak of 26,071 way back in 2018, January 16th, 2018. And right now, we've made, let me see, if we take today and for instance, 26,376. So we're up like 300 points in 2 years. You know? Well, no, let me see. The peak 26,000. No, we're down. We're down. What's that? 26,616 2 years ago, and now we're down 300 points. We're 300 points lower today than we were 2 years ago. It hasn't went anywhere. The Dow. And, you know, it's been perched on this peak ready to fall for the last 2 years. It hasn't went anywhere. Let's take a look now at crude oil. Crude oil's going up this morning. It's up 60 cents on the day, 1.14%, $53.19 sweet light crude. Now, let's take a look at U.S. Treasuries and see what Treasuries are doing. Treasuries are kind of a mixed bag, with the lower end of the yield curve falling and the higher end of the yield curve is rising. We're getting some fairly substantial rises in the long end of the yield curve today, up 3.8 basis points on the U.S. 30-year. When the long end of the yield curve rises like this and the short end falls, this is making the yield curve inversion lessening the yield curve inversion. But they've been rushing into treasuries big time. You know, I'm worried that there could be a very quick and sudden snapback in the treasuries. Quite seriously, it could be surprising when it happens. I'm worried that could happen because the treasuries right now are in a hyper bubble, and people that have bought into treasuries, they're only hoping for a greater fool that's going to come in and buy at an even lower treasury price than them. You know, this is going to continue. In other words, this hyper bubble is going to continue. They're betting on the fact that the hyper bubble is going to continue. Let's take a look now at the U.S. dollar index and see what it's doing. 78.85 on the U.S. dollar index today, and the dollar has kind of been treading water too, sideways, for a while now. It was up to 99 for a little while there, above 99. Today it's fell off a little bit. Now it's rising a little bit. 98.85 today on the U.S. dollar index. Listen, guys, starting to feel a little bit better now. Thank you for listening to my show. Hope you guys have a great day. And give me a thumbs up. And we'll catch you guys in the very next show. Bye-bye.